Hello, this is Barbara Colm again. This is the Free Market Roadshow stop in Lisbon, Portugal, and I have the pleasure and privilege to have João Matos Cruz with me, who is actually the Vice President of the Portuguese Association of Payment and Electronic Currency Entities. On the one hand, he is a member of the Bank of Portugal's contact group on the digital euro, the CBDCs, that we will discuss later on today. And I have a couple of questions to João. First of all, thank you for taking the time, for being with us. And as I know from our previous conversation, you have a couple of other, a couple of other businesses that you do, and a couple of many other things. So first of all, what is your favorite work that you do?
No, that's a great question, and thanks for the invitation, Barbara. It's my pleasure to be here with you to discuss such interesting themes. I would say that with the advent of the crypto economy, I would say that currently I'm really enjoying to work and to learn and even to teach around these themes and how we can use the crypto to improve our freedom. So I would say that all the roles that I'm currently having and experience around these teams are my favorite ones.
Well, I'm glad. And I think we share one passion, and that's not only the love for freedom, but also the love for cash.
Exactly. This is, the cash is like the ugly duck, everyone is not looking for cash. I would say, and it's even, as a payment professional for the last 15 years, I would say that sometimes, even a lot of times, I forgot to look to cash with the way that the cash deserves. We were looking just to electronic money, more convenient ways to give, means of payments to the people, and we forget cash. And currently, we need to fight for cash because it's a very important mean of payment. Assures that we may have freedom and privacy, and of course, it still is the principal mean of payment used in Europe on the retail. Currently, even after the pandemic, 60%, exactly.
Well, that is truly important. And you mentioned already the advantages of cash. It's divisible.
Exactly.
It's storable anywhere where you want it.
Exactly.
It's transparent.
Exactly, and it's fungible. It's like it gives us privacy.
That I think is the most important thing. It's because a transaction between you and me is first of all done immediately.
Exactly.
No other intermediaries.
Exactly.
It doesn't cost us anything.
Exactly.
And it's private.
That's the point. So on the physical world, the cash resolves the peer-to-peer transactions better than any way that we can consider. If we go in the electronic path, then we have Bitcoin to resolve that.
But that's not a legal tender.
That's not here. It is already in some countries. El Salvador is one country that is legal tender, yet it's not.
Even in Switzerland, in one of the canton of Zug, you can use it and pay taxes and make transactions on it as a legal tender.
And when we were talking about that previous, one of the I would say the interesting conclusions that we saw from this recent study for the European Central Bank around cash is even after the pandemic crisis, more people are holding cash at home. Even if they are not using as they used to be in the past, they are holding much more than they would.
Cash reserves at home, and their savings are in cash and not.
Exactly. So we need to protect cash. It's like it's very important for a lot of reasons that we need to consider and to protect cash, to protect the business that run cash, because otherwise it will be very hard for us to have such privacy secured. I would say.
Well, I think this is a key element: securing privacy and anonymity.
Exactly.
Well, but there are, of course, other forms of payment as well. And you've been working in the Association of Payment and Electronic Currency Entities for a very long time, and you're their vice president as well. So, but we are talking about private solutions.
Exactly.
And not government or institutional solutions like what the ECB wants to do with the CBDCs. So can you explain a little bit the difference between those private solutions and what the ECB has in plan?
Yeah, that's a very nice and interesting question. I would say, for one hand, that the private solution that exists on the markets, they compete between them. So in the end of the day, we have the choice to choose what private scheme of electronic money we want to use, or which accounts we want to have and use. And that is for me the first advantage compared with central bank money on these terms. Okay, and on that sense, we can move and make choices between them. And if we prefer convenience under privacy, we make some choices. If we want privacy under convenience, we make other type of choices. But in the end of the day, we have multiple choices regarding private, entities that are operating in the markets.
Well, thank you very much for putting that exactly like that. Because if we defend cash and private payment solutions, we don't say either this or that.
Exactly.
We want people to choose and to make their own decisions.
That's the point.
And so neither cash must not be abolished.
Exactly.
And we want to make our payments with cash. And if young people just only want to use their digital wallets,
that's perfect.
then it's fine too.
That's fine too. Exactly.
But I think can you explain to our audience a little bit the difference between those private payment solutions that we were just referring to and the CBDC that is coming out of from X-Top, from the European Central Bank or other central banks?
So the first difference is the private electronic money options that we are used to work with. They are a liability of the commercial bank. Okay, so that's the first thing. So they work under a system. We call it the fraction reserve system, and they are liabilities from normally from a commercial bank, rather than the CBDC, that is a digital currency also, but is a liability from the central bank. That's one point. So cash is also a liability from a central bank.
But it has its limits because we don't print it forever.
Exactly. So that's the point. So if we compare it with a central bank digital currency, we are talking also about a liability from the central bank, but on the digital world. And the big problem is if we lose, all the advantage that the cash has that we talked previous, that we lose that path under this advent of the CBDCs. So that is the danger. If we replace cash for a CBDC, we can lose great part of the advantage of the cash, and that is the danger that we are facing, because it's not more an option. If it happens, we will not have more an option to use privacy means of payments, or in the case a private means of payment that is issued by the state, as cash is.
So, in other words, we are safer, and it's on the cash side, and on the private payment sides than on a CBDC side.
Yeah, because
as individuals.
On the private, all the private players, they need to apply to the regulation that is under the country or the zone where they are working. So they have specific rules around authorization process, around supervision, around AML. So they work under a couple of rules, and we may choose which options we may want. Okay, so I think that's much more
more reasonable.
More reasonable, yeah.
So, what is a difference between a tokenization and the programmization of, say, a CBDC?
Yeah, that's very interesting because I would say that in theory we have two ways to look to the CBDC. A token version or a wallet version.
So a token version means?
A token version means that we are talking mainly about programmable money. Okay? We can program money. Okay?
Can we limit this amount of money or not?
We can limit. Okay?
Yes.
And it's also non-KYC normally.
Yeah. So what is KYC?
KYC is we need to disclosure great part of our personal data in order to use that mean of payment. For example, cash is non-KYC.
Yes.
I have cash, I can give you a note of 10 euros and we don't need to make...
I trust you and it's done.
And you trust the note and that promise payment that is under that note. So if we are under a KYC base, it's still that we need to disclose and to provide our personal information in order to use that mean of payment. Right? So that is a completely different way if we look to a token version or to a wallet version. So we look to a wallet version, normally it will work under the currently bank infrastructure, so under the currently existing rails. And we need to go through all KYC process. So all our use of the digital cash will be motorized. So that's a concern for us in terms about our freedom rights and privacy rights, because it doesn't give us the same level of trust that we have as a non-KYC solution such as the cash. Okay? So that's one big difference between a tokenization and a wallet base. And if you look even to worldwide projects around CBDCs, you will see that what we call the first world, so meaning the Europe, US, they even, of course, China is totally different stuff, but they all look to...
They're most advanced, by the way.
Yeah, but also, we know what are the dangers around surveillance there, but they are wallet-based. Okay? So, and they will probably rely on the commercial banks to do the KYC, because it's not the role of the central bank to do the KYC, so they will rely on the central banks, on the commercial banks to do that work. But it will limit our possibilities to choose.
But why would we actually need CBDCs anyhow if the commercial banks need to go through the process of KYC and if they need to do it anyhow?
It's a great question. I would say that is a $1 million question, because let's say, if it's to play a role on the digital world, I think there is no big, case for that. I would say.
No big advantage.
It's so. Although we go for a type of surveillance world scenario, I don't see any advantage for a central bank in Europe, where the access to financial service here are huge. So we are talking previous about, for example, the possibility to have such instrument at least as a way to increment
in the third world country with less economic integration.
Exactly, tokenization basis, so people can have they use mobile money, so they have access to some key and essential financial service that are not provided for the traditional, I would say, payment institutions. So there, I can see a case for the CBDC as the central bank as a promoter for that. It happens.
For financial inclusion.
For financial inclusion, that's I can see a point on that. I can see discussion on that, but.
I'm playing a devil's advocate now. But there are other private payment solutions already in place, even in third world countries and in less economic integrated societies or countries. Why would we then ask the central bank in this respective country to issue a central bank digital currency.
Yeah, that's an interesting point. What we realize in some countries is that it's different to make cash in on the digital electronic payment solutions that exist.
So, when you were working with the Central Bank of Portugal on this digital euro group, do we know anything about the fees already in place, or will it be the same fees that we use already for the credit cards or the payment cards, or what is?
At least on the phase that we are now, that is the preparation phase for the central bank. There is a plan about the launch of the digital euro. At least the information that we have from our group is that it's under discussion. Okay, because there is all the complex and bureaucratic process around this project, but the fees that will apply for the providers that they can charge will be kept at a level that will be proposed, I think, by the central bank. But then it needs to go through all the process to go to the parliament, to the commission, and to the council. So one point that I also want to mention, because that for me it's quite also it's quite frustrating, I would say. If you look currently for the project, for the level of infrastructure that the payment providers need to assure, free of any charge, okay, in terms of QIC, legal issues that may occur on the transaction level, records. So all that infrastructures and service that any provider needs to to assure in order to be an agent of digital euro is quite huge, and it will put out most part of the payment institutions that are working in Europe. So for instance, in the Portuguese case, I would say that this will be very difficult to have any player to issue digital euro service, because the level that you need to support free of any charge, and just then you can charge for what they call added value service. It's quite impressive and very difficult to achieve.
So on the one hand, we have the know your customer, the KYC issue, and on the other hand, we have the issue of fees. And transactions.
Exactly. It's like, okay, if you want to play this, let's put the discussion around, we should have or don't have digital euro, but let's assume, okay, we go through this project ongoing, and let's say if it can be interesting for all the payment institutions to participate on the project. So let's look on that side. The level that is required to apply the digital euro is such capital intensive that will be hard for, I would say, 95% of payment in all Europe. So it's something like, okay, you can play this game, but you will not have conditions to play because you don't have money, And then, if you are able to assure that level of, investment, then the charge that you may apply will be kept by legislation.
Okay.
So it's a very hard business case, even for the private players.
Literally, you cannot make this business case.
You cannot,
because there will be no winners. There will be only losers.
Only losers. It's very difficult. If you look to that, it's very difficult because for one side, to play that game, you need to invest a lot, and then when you are able to charge anything, those charges will not be the market to decide what are the charges. It will be again the regulation to cap that charges. So how do you, as an entrepreneur or as a businessman, how do you look to such a project or to such a business? Very difficult, So it's a political decision, actually, nothing else. It's a political decision.
So, and we always keep asking, with everything we do on a business level, on an entrepreneurial level, who is benefiting? Who will be my customers? Who will make use of that? Are we improving society? Are we improving our lives with that?
Exactly.
And will the digital euro do that?
It's very hard to respond that because honestly, it's like, for one side, that I'm not even talking about the philosophical questions about central bank digital currency. But even if you look to the particular case that we currently know, so the limits that you have to transact with digital euros, that is 3,000 euros, I would say.
Yeah, that's what they keep saying right now.
And then you have the mechanisms to the waterfall.
Exactly.
So is it just put complex to something that you already have resolved? So if you want to buy a car, you pay, as a credit or with a private solution, you pay. You don't have that issue to pay, let's say, the first 3,000. I will use my digital wallet, and then they will go to my bank account and take out the rest. It's quite strange. Or are you talking just about a pocket money stuff, or But
so
for a pocket money, we have cash. It's or
and
mobile money. Any solution of mobile money, it works like that.
Yeah. So actually, there is no benefit.
And it's very hard to see any benefit, unless you want again to because it's like, I would say, in the end of the day, I understand that role that in Europe we need to do something because China is doing, US is doing, UK is
the US
doing.
is not doing it. They pulled back. So is the Bank of England,
because they have a Bill of Rights.
Yes. Okay.
Yeah.
That's a big difference.
That's a big difference. But we have also constitutions, national constitutions.
We have.
Although the regulations in Europe may apply, above the constitutions, we need to rely on our.
Joining the European Union, we have all handed out or having given away the rights, our constitutional rights, at least with regards to the currencies, to the euro, to the decisions, to Brussels, to the Commission, to make those decisions.
Yes, that's the point. But I think it's time for the constitution courts to look to that, because there were cases for other reasons. But in Europe, I think it happens already in Germany, in Italy, Czech Republic, Poland, for other reasons, that the Constitutional Court, talked about decisions that they don't agree that were coming from Brussels. And, because it's what protects us against the state abuse is our Constitution.
Exactly.
Otherwise, you don't have nothing, you know. So that's very important that we all people realize that, our Bill of Rights is our national constitutions.
Well, thank you very much for mentioning that. And, the last question I would like to put on in our discussion here right now, we started with cash, we end with cash, and now we have the ceiling for using cash as a means of payment with transactions must not be higher than 10,000 K. Yeah. This was the 10,000 euros. Yeah. This was the decision made by the European Parliament and coming out of the Commission and limiting these transactions. What is your take on that?
It's again, a type of violation about our privacy, about our private decisions, what mean of payment, what we want to use. I understand all the case around, the AML, but we cannot assume that in any in all the consumers there is a criminal.
Exactly.
Because it's not like that. No. It's not like that.
99.9% of the European citizens are honest, hardworking, trustworthy people.
And one of the things that I would like to even realize, and I think it's part of the role for the policymakers, is to show us if indeed these type of measures that they are taking are getting any, results in terms of fraud prevention.
Yeah.
Because, and if so, what are we talking about? Because otherwise it's very hard to understand why those decisions are being implemented. Why is this pressure around, such, I'll say such amount of compliance rules, AML rules for anyone and for the business that are on the market. It's very hard because you run a business model and tomorrow comes another law that will increase your costs dramatically. Yeah. And it's very hard. And in the end of the day, what are the results in terms of fraud prevention?
Qui bono? cui bono, as the
Exactly.
Latins say.
Exactly.
Well, João, thank you very
Thank you
much
very
for
much,
this
Barbara.
great conversation.
It was great.
And I'm looking forward to further debates, and stay tuned with us. This is the Free Market Roadshow from Lisbon. Thank you
Thank
very
you.
much.
Bye-bye.
Thank you.
Thank you.